This is Your Money, Your Call.
Hello, welcome to Your Money, Your Call. I'm Julia Lee from Valdirect. And joining me on the panel tonight, we have Ben Clark from TMS Capital and also John Athanasiou from Red Leaf Securities. Welcome to you both. And of course, if you have a question about shares, our phone lines are open right now on 1300 30 34 35. Or if you prefer, you can email us on yourmoney@skynews.com.au. And we'll be here at the desk until 9 p.m. It's a 2-hour show, so make sure you get on those phones and give us a call. And what a market. We saw the Aussie share market down, but a lot of company news about Bellamy's jumping by a massive 25% today. Afterpay also coming out with some pretty good numbers for the quarter. That stock up by 17%. And we saw A2 Milk jumping 6.5%. So let's ask our panelists what they think about the market and also confession season so far. I mean, Ben, I guess January is traditionally the confession season before the half-year numbers come out in February. And it feels like we're getting a lot of positive news coming through. Yeah. Is it like that for you?
I would agree. I mean, I don't think I've really seen any of our stocks have any negative news. I haven't seen much negative news out there, company specific. And we're actually seeing some upgrades starting to come through, which it feels like a long time since we've had to see companies upgrading their guidance leading into their results. So definitely, I think the tone is still quite positive, Julia, out there. The blue chips still are. We're just getting that frustrating thing where the banks have pulled back a bit this year and the resource stocks have moved up, and that sort of cancelled each other out from an index point of view. But in the next leg down, as you identified, there's been some pretty good stories.
And you mentioned the commodity-based stocks, materials, outperforming hugely, up by a massive 4.2% in the year to date so far, despite the index being down by 0.3%. The big question is, can we see it continue? We saw BHP taking a little bit of a step back today, down by 0.8%. What's your view on commodities at these prices?
Look, always hard to know what the commodity prices are going to do this year. I suspect oil's now probably had the bulk of its recovery. So, you know, a lot of the energy stocks have been really strong, and that's helped BHP as well. I think with, you know, they've talked about spinning off their petroleum division, and you'd have to say now things have improved a lot. They should get a much better price for it if they were to do that. Iron ore prices come off a bit. Look, I think commodities are probably going to have a reasonable year. Global growth is strong. Prices still look reasonable. The balance sheets of these companies are great, and they're returning cash to shareholders, and I think they're still very wary of going out and misusing those big profits that they're generating at the moment. So I think they should have an okay year. Okay.
And John, I know that at Red Leaf you guys have been pretty big on the weed stocks or the cannabis stocks, so a nice start to the year.
Great start to the year.
What's your view now? We've got that decision on Australian exporting
medicinal cannabis. Listen, I think the sector's got a long way to go, but you have to be more company specific now because everyone's latching on. So you just got to look at things like who's got a license, who's generating revenue, and where are they located and what's their grand ambition. Our preferred one is the hydroponics company.
I was going to ask who's got the license and who's generating revenue.
Well, you've got the hydroponics companies, CPH, Crespo, CAN, so they're the big three, in my opinion, that have got licenses and are most likely to succeed.
Okay, so plenty to talk about on the market. We do have our first email here from Peter, who writes, could I ask the panel their view on Grange Resources? Well, talking about iron ore, it's had a great run up into 2018, but slowly starting to see a little bit of profit taking in this space. Grange Resources, a smaller one we haven't spoken about for a while. They've got their mine over in Tasmania. They look at pellets as well. Ben, Grange, gee.
I haven't looked at Grange for years. Yeah, I mean, you summed it up there, and it's probably to the extent of my knowledge, Julia. From memory, I think it is a lower quality style of iron ore, and as a result, but you know, I know they got into debt trouble, balance sheet trouble. I don't know if they've recapitalised yet, but I don't. Have you heard about it, John?
Well, the last I heard is that they've got a relatively conservative balance sheet. They've got past that stage. Yep. It has a tendency to fall around the 12 cents mark and then have a strong rally to where it's at right now. I haven't looked at it in a while though, but if it does pull back to around 15 or so, I think it looks quite compelling.
Okay, and I guess the thing with pellets is that it takes a bit more capex to get them out of the ground. They're high quality, but they're more expensive to get to. Do you prefer the high quality product at this stage, or Fortescue's lower product? How would you play the iron ore game at the moment?
Oh, you can't really question the way Twiggy goes about his business, but outside of him, I prefer the high quality. You got better margins and a greater level of safety because, you know, as we're all well aware that commodity prices are quite volatile, so you want the better quality ones with have got greater margins.
And what do you think in terms of iron ore? Any favourite stocks, Ben?
Yeah, I mean, with Grange, you've got to look at the cost of production. I know that their shipping costs were always a lot higher because, you know, getting it from Tassie and iron ore is really, it's an earth-moving game, and it's a bulk commodity. You know, it's trying to do everything logistically as cheap as you can. So, you know, the Atlases and the Granges of these worlds is smaller scale, and I think they find it, Mount Gibson find it harder to compete. Fortescue, I think, is interesting. The big question mark with Fortescue is what is Tooheys Forrest's sort of next plan? You know, he's got a new CEO that's come in, a new CFO that's come in. He's spoken about potentially diversifying, so, you know, moving into a new project. Or does it become a massive cash cow that spits out amazing dividends, which it easily could? So until we get some direction, probably as to where the company's headed, but I'd stick on the sidelines. But probably the one I like the best in the space.
Oh, so Fortescue.
Yeah, I think so. You know, at the current prices, I think you've got great management. It's now got a great balance sheet. It's spitting out. It's paying huge dividends. I mean, if they just hold the dividend they paid last year, it'd be about 9% fully franked. So but you know, that's only sustainable if the price of iron ore holds up. But you know, I find it hard to go past. They've achieved everything that they've said they would, and you couldn't say the same about the larger competitors.
John, would you agree? Fortescue, your pick in the space?
Yeah, it'll have to be the better ones out there. I mean, as was mentioned by Ben, you know, they have achieved everything that they set out they would. I mean, only a few years ago, everyone thought it was the end of them, and how quickly have they turned that around? They dramatically cut costs. There's absolutely no fat there. It's just a question really on where iron ore prices are going. That's the only danger, but that's across the board in the whole sector. So,
While we are talking about commodity prices, I guess putting you on the spot, what's your favourite commodity exposure for 2018? Ben, what do you like?
Well, yeah, I mean, it was definitely oil, but oil has run hard over the last, even just the last few weeks. It's run through $70. I still think the gas stocks look quite interesting because they've still been under some pressure, and you know, the gas price is linked to the oil price, and I think the market got very down, and they're sort of 6 to 12 months into that. They've worn the pain, they've done the capital raisings, they're cleaning up their businesses. So I still really like Origin. It has run quite hard now, but it has pulled back recently in the last few days. But you know, that's a business I think is going to start paying quite a good dividend. It's a much better business now than it was going into the downturn in the oil market. And you know, that's probably the commodity for me, Julia.
Oh, so looking at gas, I mean, looking at the commodity space, what do you like, John?
I'm actually thinking of the precious metal space. I'm thinking gold in particular. I do think inflation might be a theme as the year progresses. So people typically go to precious metals and in particular gold when that occurs. You know, it's quite interesting with all the political instability that we have, that gold hasn't even done even better than it has in recent times. So, yeah, I think it's due to have a decent rally in 2018.
Wow, some very interesting views out there. We've got gold on one side and gas on the other side. And of course, commodities have been rallying so hard. In the last year, we've seen oil prices up by 22%, copper up by 22%, nickel up by 25%, gold prices starting to run again. It's up by 11% over the last year, but just in the last month rising by 7%. On to a question from Rod, who asks, could you please ask your panel their thoughts on two companies, Brambles and Vita Group? So having a look at BXB as well as VTG on the market. I might start off with you, John, this time. Looking at Brambles and Vita Group, these both stocks that have actually had a pretty bad 2017. If we have a look at Brambles, that was down 20%. And Vita Group, well, we know that that's dependent on Telstra, and it's the margins are dependent on Telstra as well, and that's down 43% in the last 52 weeks. So looking at Brambles and Vita Group, do you think we're going to see a turnaround in 2018?
There could potentially be a turnaround, but I'm not going to jump the gun and advise clients to get in them at this point in time. When you see stocks move that bad on the downside, you just want to see the trigger point for it to turn around. And the first thing that you typically see in that case is the financials. So I'll be waiting for the numbers to come out before I'll be seeing any excuse to get into those two particular stocks.
Okay. I mean, I guess the last 52 weeks hasn't been too good for these two stocks, but we are starting to see a rebound. I mean, with Brambles, in the last 3 months, it's up 10%, and Vita Group, well, it's up 22%. I mean, we talk about iPhones and retail and the impact, and it's directly having an impact on stocks like Vita Group and probably stocks like JB Hi-Fi and Telstra as well. Yeah.
Look, Brambles for me is probably a hold, Julia. I think it's a good quality business. I struggle with it, like it's probably still trading on 19, 20, 21 times earnings with very little earnings growth, underlying earnings growth. And there are some pressures that they're facing, particularly in the Americas. So, the last year for Brambles was very messy. An outgoing CEO, I think there were 2 downgrades. They did reaffirm guidance into the end of the year, and we are seeing a recovery. And I do think it's a quality business. But I just wonder, what's going to be the impetus to push it up that next 10 to 20%. Vita Group, I haven't, I've sort of followed from the sidelines. I've never really looked at it too hard. I've always thought that when you've got that relationship with one company, as they did with Telstra, it's very hard because I think, the company who they're the reseller for, if they see them doing too well, they're just going to move in and sort of say, we're going to change the goalpost, and that's exactly what happened. But they've got an excellent CEO there who's very hands-on in Maxine McHugh, and they've now renegotiated the next 3 or 5 years or whatever the agreement is with Telstra. I'd probably be actually keener on that one because I think a lot of the bad news has now been flushed out, and I think they've got a management team who will probably find a way, even with a harder agreement, to grow those earnings. And they are still pretty heavily invested in the company personally.
And I guess that's the biggest risk, that we don't know the structure of their deal with Telstra, and we don't know the details yet. So
that's always been the risk that you've taken on with this stock, and it's been the reason that we've avoided it. To me, it is too hard. There'd be other stocks I'd pick out there, but out of those two, I just think where they are, they've had a massive sell-off. I mean, I think we hit $5 or something at one stage, and it's $1.20 or something now. And I just think it's probably got through the really big ructions last year, and it could easily run, back 40, 50%, I would have thought.
Okay, so Ben liking Vita Group. I mean, looking at Brambles on the other side, we've started to see retail sales numbers being revived over in the US, and Brambles, of course, with CHEP pallets, big exposure there, but also the currency moves. Everybody was predicting a weaker Aussie dollar. We've seen exactly the opposite. So,
which doesn't make sense, does it? I mean, with everything that's going on, you would have expected the reverse when it comes to our currency.
So what do you expect for currency, and does that change your view on Brambles or any of those US dollar stocks at all?
It's one part of the puzzle with Brambles that you have to take into consideration. It's not the whole thing, but in terms of currency, I think it should do what it should have done, so to speak. So it should reverse. I do see the US dollar strengthening.
So it should be a positive for things like Brambles, Amcor, Ansell.
And so on and so forth. But because with the tax cut that have just been passed, I expect money to be flowing through back into the States. So we should be positive for the US dollar.
Okay, on that note, we do have to take a short break, but if you'd like to speak with our expert panel, our phone lines are open right now on 1300 30 34 35, and of course you can email us yourmoney@skynews.com.au.
130 years ago, 7 men gathered in Broken Hill and dared to think big. The company they created was BHP, the big Australian. Imagine what we could all achieve if we continue to think big.
Turn up the heat during the ultimate BMW 2017 plate clearance, with hot opportunities and finance offers available across the range.
How many hotels does Trivago compare? 1,000? 100,000? 500,000? 700,000? Trivago now compares prices from more than 1 million hotels to find your ideal hotel for the best price. Hotel Trivago.
Getting hammered with ridiculous interest on your credit card? Yeah, me too. But check this out. With Finder, you can finally make that change to a better credit card. Just drop in your balance and interest rate and Finder instantly calculates what the banks are offering. A couple of clicks could save you hundreds or thousands a year in credit card interest. One more click to apply. Find better.
Want to save time? Well, try our new time-saving way to shop. Now, Woolworths will pick it and pack it, ready for pickup. It's called Woolworths Pickup, and it's free.
That's why I pick up from Woolies.
This couple met on a paid dating site. Jen and Luke met on Plenty of Fish. This couple spent over $100 a month. Jen and Luke spent nothing. Happy couple? Happy couple. Why pay to meet someone? plentyoffish.com.au. Simple, free, and it works.
When you want to borrow money, not knowing your credit score before you apply can be a big mistake. Why? Because credit scores are one indicator of your credit risk. If you know you have a high credit score, you may be able to negotiate with a credit provider from an informed position. That's why it pays to get your free credit score. So before applying for a loan, visit getcreditscore.com.au. It takes less than 60 seconds. It's safe and won't affect your credit score. Plus, it's absolutely free. Knowing your credit score before applying for a loan may be able to help you negotiate with a credit provider from an informed position. We connect to Australia's leading credit bureau, so you can be confident in the information we provide. To better understand your borrowing potential, visit getcreditscore.com.au today.
Australia said yes to same-sex marriage. What about coal-fired power, the refugee intake, euthanasia, major drug reform, cutting private school funding, Indigenous recognition, female gender quotas? Have your say. Politics HQ is back, only Sky News Live.
Back with your money, your call.
Welcome back to Your Money, Your Call. We are still taking your calls, 1300 30 34 35. And of course, you can email yourmoney@skynews.com.au. And we have Tulsi on the line from Sydney. Tulsi, welcome to the show. How can we help you out tonight?
Thank you, Julia, for taking my call. Questions regarding Mint Pharma and Afterpay for long term. Thank you.
Sure, so having a look at two stocks, Main Pharma and Afterpay. I think both of these doing quite well on the market, especially Afterpay after coming out with its second quarter numbers and saying, look, it's going to consider looking at the US market, which of course is such a big market compared to Australia. So let's start off with Afterpay. APT is the stock code there. One of the strong performers has come up with upgrade to upgrade, I guess on revenue, not on the profit line as yet, but it's been a fantastic growth story. So APT is the stock code. John, looking at Afterpay.
What a phenomenal story. I mean, I'm very bullish on Afterpay, particularly after their US announcement. I don't see why it can't continue this positive trend. I mean, given they've essentially brought lay-by back in a way, in a very clever fashion with the 4 payments, and they keep on winning large brands, which will keep on helping them in the revenue side of things, so revenue growth. So, yeah, there's no reason why that can't continue. Well, until there's like a new, more clever player in that space, but they seem to be dominating.
Absolutely. I mean, $6.51 is the price that Matrix, their new partner over in the US, which is a venture capitalist in the tech space, is buying into the stock. Today, of course, we saw a jump. It opened at $6.60 and ended the day at $7.62. Wow. It's just been absolutely incredible, up 17%. Have you missed the boat on this one, Ben?
I have, but I think it's probably going to keep going as well. You know, it's how you value this company, I think, really is licking your finger and sticking it in the wind, and you sort of hope that you're right. But the business clearly has very strong momentum, and that quarterly update today was positive right across the board. But you know, Matrix coming onto the registry is a big deal. The only other company they've invested in the Australian market is Xero. They were one of the earlier investors there, and they own about 10%, I think, of Xero. Big investment, and I think they were one of the first investors into Google, Facebook. You know, they've got serious credibility in Silicon Valley. So you've got to say, you know, if they can help Afterpay roll out what they're doing in America, start signing up people like Walmart and stuff like that, it could keep going.
And look, the US has been make or break for a lot of Australian companies, mostly break. I mean, you look at, you know, Invocare, the funeral business, Yowie, just to name a couple. Is this going to be the make or break moment for Afterpay?
Well, there's still probably a lot of room for growth in Australia, but the share price has already, I think, factored in success overseas. So if they don't achieve that, then there will be weakness. It will take a year or two for us to know that, really. But I think what they've done, which is smart, is they've partnered up with someone on the ground in America who's got a massive track record of building businesses. So, and that partner has taken an equity stake in this business, so they're incentivised for it to work. So, you know, you give yourself every chance, don't you? You know, if you look at what they've done in Australia very, very rapidly, it's got massive traction, and retailers are all trying to find ways to grow their sales, and this technology seems to be a way that they're achieving it. So it's one of those cases potentially where everyone wins from it. And the shareholders at the moment.
Afterpay shaking up lay-by over here in Australia, in New Zealand, and now over in the US as well. Would you be buying in at these levels? $7.62 it finished at, and that was the high of the session and an all-time high as well.
Well, I'll be buying at these levels, and I have to admit, I couldn't help myself. In saying that, I did take profits. I couldn't help myself, but I probably regret it because it's going to go higher with the trend. You always follow the trend, and that continues to go upwards in the interim. But yeah, the big risk, as you mentioned, is if they don't succeed in America, because there might be a fair bit of it in the price already.
Yeah.
And what about Main Pharma? I mean, talking about the US, another stock that's heavily exposed over to the US, especially the regulatory environment over there. How do you see the US political situation, I guess, panning out this year, and how would it impact on a stock like Main Pharma that's in the drug space, the medicine space over in the US?
Well, I think the policy of President Trump will be beneficial to Main Pharma. I think it'll be more relaxed, more business-friendly, less regulated, so that should potentially help them out going forward.
I mean, because Trump has been quite vocal on bringing down drug and medicine prices, and that's put a bit of a dampener on Main Pharma's share price, but also generic drug sales over in the US. You know, we've seen a few warning signs. Is the worst behind Main Pharma?
I don't think we'll know that for another year, and we'll probably, maybe, I mean, they had the thing that probably I saw as a positive sign for this stock was when they had another profit downgrade at the end of November and the share price didn't drop. You know, it was like the market had already factored another one in. So it was probably, I think it had got to the point where all the bad news and then some was already in their price at 60 cents. And what you're seeing now is probably a return to a more realistic valuation and the hope that they've got through the worst of it. But there is no sign that they have got through the worst of it. I mean, this fourth quarter earnings season where we've just kicked off in America, we will get, you know, the Pfizers and the Allergens of this world reporting, and what they say in terms of their generic businesses will be key for Main Pharma. If they come out and say it's still incredibly tough out there, there's still discounting, still regulatory issues, this will be back at 60 cents.
So you wouldn't be buying it now?
No.
You'll be waiting to see that fourth quarter earnings reports come through from those?
I just think there's better healthcare stocks to own, Julia, and you know, it's got a good balance sheet, it's got a good CEO, and I actually think it is a good business. But as you said, Trump, you know, he has publicly said that generic companies are ripping everyday Americans off, and he wants to find a way to get prices down. And he's pointed to, and you know, there is some truth to it. The average price of generic medicines in the US is almost double what Canadians pay. So when you look at that, you sort of think, how can that be the case? And it's because they have a lot of political power in America versus Canada. And there is room, I think, for more pressure on pricing. So it's very complicated, all of the regulatory sort of issues that they face.
Do you think you'll be able to fight those powerful lobbies?
I think probably not.
Yeah.
But I think the headlines still scare investors. But it's interesting, about 9 months or a year ago when Trump first got in, one of the first things he did was he had an inquiry into generics, and the Republicans actually put a bill onto the floor saying that they wanted to allow Canadian generic manufacturers to import directly into the US market with zero taxes or you know, tariffs, which they currently pay, which is why they can't do it. And like 6 or 7 of the Republicans voted against it, and that's because supposedly the healthcare lobby is so powerful, it's funded their campaigns, and they had to vote where they are. So, you know, that's the risk, right? That prices do drop a fair bit further.
So a yes for Afterpay and a no for Main Pharma from Ben. We do have our next... we actually have to go to a break, so let's go to a break. We'll be back to speak with you after this break. And of course, if you have a question, we'd love to hear from you. The number's 1300 30 34 35, or you can email us yourmoney@skynews.com.au.
You're watching Your Money, Your Call on Australia's Business Channel.
Turn up the heat during the ultimate BMW 2017 plate clearance with hot opportunities and finance offers available across the range.
Did you know men and women have different nutritional needs? Switch to Centrum Men and Women's multivitamin range from Chemist Warehouse. Centrum for Men provides essential nutrients to help support healthy muscles, daily energy and immunity, while Centrum for Women helps maintain strong bones, healthy hair, skin and nails. Right now at Chemist Warehouse, Centrum for Men and Centrum for Women are just $14.99 each. Switch to Centrum multivitamins today. Live, look, feel well at Chemist Warehouse.
Hi. How was your day? Good. Good. Hey, sweetie, why is that little girl alone? She's always by herself. Well, why doesn't anybody play with her?
1 in 7 young Australians are living in poverty.
Do you think we could help? Yeah, I think we can too.
Be the one to change her life. Sponsor an Australian child through the Smith family today.
At BHP, we work hard to support our communities because it's their support that helps us deliver the benefits of Australia's natural resources to all Australians.
I know a lot of people are relying on us.
If the school wasn't here, none of the kids would be here.
Imagine what we could all achieve. We continue to work together and think big. Think big.
Hello, secret camera.
It's too crazy.
Yeah! I'm okay with crazy.
Uh-oh. Here we go.
Gotcha.
Whoa! You're darn right, whoa.
Can you put a price on your dreams?
I wanted to see what you'd do, and you didn't disappoint.
Foxtel Movies celebrates Heath Ledger with a special pop-up event featuring all of his films.
Heath lived every moment to the fullest.
Spend 4 days with an Australian icon.
Yes! I guess I'll see you around, huh?
Heath Ledger starts 6 a.m. Friday on Channel 400.
Australia said yes to same-sex marriage. What about coal-fired power, the refugee intake, euthanasia, major drug reform, cutting private school funding, Indigenous recognition, female gender quotas? Have your say. Politics HQ is back, only Sky News Live.
With Your Money, Your Call.
Welcome back to the program. Joining me on the panel tonight, we have Ben Clark from TMS Capital and also John Athanasou from Redleaf Equities. And if you have a question you'd like answered, please give us a call. The number's 1300 30 34 35. It should be up there on your screen, or you can email yourmoney@skynews.com.au. And we now have Peter on the line from Hobart. Peter, welcome to the show. How can we help you out tonight?
Yeah, hello, Julia. I can't pronounce the Portuguese name, but it's OGX is the code. And from the recent reports there, since they've started the hammer mills, they've been getting quite good results. And I'm just wondering what the panel's opinion of it is.
Sure. So Orinoco, I think Orinoco River is the longest river in South America, and this particular hammer mill is over in Brazil. It's quite interesting because Orinoco actually bought this, so it's an older mine, but they're starting to get some good results, whereas previously, obviously, those good results didn't come through.
Yeah.
So in the exploration and development phase, but getting some strong results through their drilling program. Ben, looking at something like this, I know it is a bit more speculative, a bit smaller, $49 million market cap in that gold space. You're pretty much exploration and development at the moment.
Yep.
What do you look at?
So, I mean, we had a very quick flick at the last announcement they made during the ad break, and the thing I'd be a bit wary of there is the gold sort of results that they're sort of reporting are based off samples, not off drilling, and that's something when you speak to the mining companies, they even the geologists will say be very wary of that. Especially a guy going in with a pickaxe and like picking out some ground, and he's oh look what we found. The drilling results are properly assayed. A lab will it's like sort of signing off on something. This is actually there. And you know that they're real. Samples can be very easily manipulated, and I'd be careful about drawing an inference as to how rich in gold the ground is going to be. Normally, and not knowing the cash position of this company, these sort of outstanding announcements that do come out are preceded by capital raising because they can do it into some strength, and then the share price dies away.
Okay, and John...
I was just going to add, as you mentioned, the first thing I look at with a gold exploration company, or any junior resource company for that matter, has such an exceptional rally after their exceptional drill results, is to check their cash position and to see if they've recently done a capital raising. You actually hope that they have done a capital raising because they've got a better cash position, you won't get diluted. And I briefly noted, and I'm not sure if this is correct, but I believe they're going through a commissioning stage. Now, commissioning stage, for those people that are unaware, is probably the most riskiest part. It's probably more riskier than actual drilling, because 9 times out of 10, they'll do something wrong. Because these guys are typically experts in digging and finding, but commissioning into production, well, that's a whole different ball game. So just be a bit wary about that. But number one is check their balance sheet before you get involved in that particular stock, or any junior resource stock for that matter.
Okay, so lots of changes for this company, and no wonder that we've seen the stock price moving from, I think, about 1.9 cents to over 6 cents. Reorganisation of the company's board in December. I guess an update on the company's operations and business in Australia and Brazil, which is a big one that's been driving the share price. But overall, a small company, $47 million market cap, and hopefully those good results keep on coming. On to a question now, and this one is from Tim in Melbourne. Tim, welcome to the show. What's your question for our panel tonight?
Hi, Juliet. Good to see you back in 2018. Just a question to Ben and John and yourself about iCar Asia, and it came out with a quarterly result today. And does it have any petrol in the tank?
Like that,
it's a good question, given that the share price has been under a fair bit of pressure over the last year. Recently, we've seen a bit of a bounce back, and look, today the shares are up a massive 14% on the back of those quarterly numbers. But fitting, Tim, that you should call in on a day where we've seen the last new vehicle sales numbers here in Australia as well, with the Australian Bureau of Statistics not publishing those numbers anymore. iCar Asia, though, of course, that Asian exposure. Ben, I know you've been interested in this one in the past. Car Sales owns 15% of it, and there are a number of larger shareholders with around about 15-16% of this stock as well. Yep. What do you think of iCar now?
Yeah, look, it's been a poor performer. So there were two companies came out of the Catcher stable, which is Patrick Grove's company, a very successful entrepreneur, tech entrepreneur. One was iProperty, which was an absolute star and ended up getting taken over by realestate.com. And this looked like it was going to go the same way when Car Sales came onto the register, and then they increased their stake. From all accounts, they did approach Catcher about making a full takeover bid some time back now, which Catcher at the time sort of said no way. The issue that the business has faced is twofold. The first is Thailand, Indonesia and Malaysia have all had significant slowdowns in their economy over the last year or two, which led to a dry up in new car sales. They also had a competitor who was marketing very aggressively, making no money, ads for free on our website, and they had to respond to that. It seems like, and the big issue the company has faced for the last couple of years is they haven't been able to control their costs. To me, they've continued to have good cash collections each quarter, but their costs have been rising at the same sort of pace, so there's no closing of that gap to try and generate a profit. And I think the reason the market got excited today was that for the first time I can remember, costs actually fell for the quarter, and they indicated they think that can fall further, whereas revenues rose quite strongly. The company's very well capitalised. It's got like 24 mil in cash, and it's got about another 13 million credit line. It's only got an 80 million market cap. So, you know, I know the CEO fairly well, and he used to run eBay over in Europe, in the Netherlands, and it could do well from this point, but it has had its issues, and these sort of companies will have these issues, particularly in these emerging nations. Yep. You know, and when you speak to them, there's so many moving parts. You think you know what's going on, and then you find out that something's changed. So it's speculative, but I think it looks okay.
Okay, and at the price 24 cents,
yeah,
you know, it's a far cry from where it was around about a year ago, at the 33-cent mark.
Yeah, well, it was at $1 2 or 3 years ago, and I think car sales actually bought in at about $1.20 or $1.40. So
written it off.
Yeah, so they haven't picked this one that well either. They have sort of washed their hands of it, but it'll be interesting to see if this starts to get their interest again.
Okay, so looking at iCar Asia, I mean, I guess this is the car sales of Asia,
Yeah.
trying to get that traction and trying to expand, and they have been making a few acquisitions as well in Asia. What do you think of iCar?
Well, I actually thank the viewer for calling, and I'm drawing it to my attention because it's fallen out of my radar because of the problems that Ben mentioned it had. This could be the potential of a turnaround. I'm not fully convinced yet, but I'm actually comfortable in following this turnaround trend and taking a potential profit at these levels. If it keeps on moving towards, there's no reason why I can't go back to 32 cents fairly quickly. You know, off the back of these results, as people get more confidence. I wouldn't be a long-term holder because I don't want to hold it until the next quarterlies come out, just in case I don't get it right. So I'll be buying off the back of this announcement and be holding it to around the 30-odd cents mark.
Do you think the turnaround's in play? You know, a 23% increase compared to the previous corresponding period.
Yeah, I think it is if the conditions continue to remain favourable to them. I think they've beaten off this competitor. They're now well capitalised against. They actually did a capital raising fairly recently. You know, like PM Capital took up a decent part of that raising. I know Paul Moore took up some personally, I think. So it's got some good people backing it now. It's hard. They're hard. Like, so what it needs to do, Julia, is it has to close that gap between, you know, your costs being higher than your revenue. You know, it sounds obvious, but it's actually quite hard to do, because to get revenue high, you generally need, the biggest cost is staff and marketing, you know, advertising. So I think you need to be patient with it if you're a long-term shareholder, and you know, if you've got a collection of 5 or 6 of these, you'll find probably 1 or 2 fail, 1 or 2 do spectacularly well, and somewhere in a couple of others in the middle.
It's looking pretty interesting. ICQ is the stock code. There's some big shareholders on the register. Catcher has a 17.6% stake, Rev Asia 16.3%, and Car Sales a 15.5% stake there. On to a question now from Michael in Melbourne. Can I please ask for your medium and long-term view on Australian Finance Group? AFG is a stock code there. So having a look at a smaller company in that, I guess in the financial space, the market cap here, $384 million. So looking at a smaller cap finance stock, and look, the stock has hit an all-time record high today. Not an all-time record high, but recently hit an all-time record high, the 15th of January. So that was a few days ago. What do you think of this one, Ben?
I've got is it mortgage broking?
Mortgage broking.
Yeah. I don't know. I'd be a bit wary of mortgage. Like, there's Mortgage Choice as well, which is listed. These stocks all look quite good, I think. the threat to these businesses is that the banks at some stage start to flex their muscles, and over 50% of mortgages in Australia now are originated by mortgage brokers, and when you look at the commissions that they get paid, it's probably one of the only areas that hasn't had that big regulatory shake-up to me, and potentially are over-earning, I think. So, I know the Commonwealth Bank's been quite proactive in trying to get more of its loans sourced through its branches, branch network, and through its customer service, so that it doesn't have to pay those margins. But if you started to see the banks really, who are under pressure themselves to grow their profits and increase their margins, to say, well, look, that's one area we could go for, because we pay a trail commission for 5 years on these loans that we don't need to if we can find a way to originate the mortgages ourselves. But at the same time, mortgage brokers provide a great service, I think. They make it pretty easy for consumers, and it'll be interesting to see. But aside from that, I think these companies are doing really well. Yeah.
So a really good point there by Ben, that you have the regulatory risk there, because we are going to see the spotlight on the finance space over the next 52 weeks. But of course, given the East Coast experience in terms of housing over the last couple of years, the mortgage sizes have gotten pretty big out there.
They have gone
The question is, is that all priced in now? The stock reached an all-time record high a couple of days ago. Would you be buying here?
Well, I think that the two questions here is, number one, what's going to happen regulation risk-wise, and where do you see property prices going? I think they're two big factors, and also if the banks say enough's enough, we're going to go really for these mortgage brokers. At this stage, it is looking good, AFG. I don't think it's a medium to long-term hold because of those potential risk factors, but from a trend perspective, I'll be holding it on a short-term basis. All right, it's a very hard question. What is short-term, what's medium-term, what's long-term? That comes down to the individual investor's risk profile. But in the short term, which I consider to be, over the next 3 to 6 months, I'd be holding it at this stage.
Okay, it's not a long-term buy, but maybe a short-term one for Australian Finance Group, AFG, the stock code there. We now have Shane on the line from Sydney. Shane, welcome to the show. How can we help you out tonight?
Good evening, panel. My question is on Auckland Airport, AIA, and also Tony Lecantro's stock, MBK.
Sure. So having a look at a small mining stock as well as Auckland Airports. Auckland Airport's actually an interesting one. Last week we saw the 10-year Treasury yields over in the US hitting above 2.5%, and of course these Auckland Airports, Sydney Airports, Transurban, very much upon proxies, and of course we saw the share price being impacted. In fact, we've seen Auckland Airports falling from around about $6.25 to be trading closer to that $5.70 mark. So that's a pretty big fall in a short space of time. I guess the question is, has the market overreacted? Is the bond bull market that we've seen from the 1980s well and truly over, or are we going to see some more volatility there? People have been calling the end of the bull market for at least the last 3 years now, Ben.
I reckon at least the last 10 years. Yeah, I mean, the market's been very stable over Christmas, but this is an area of the market that has been hammered. Transurban, Sydney Airport, APA, Horizon, all of the property trust sector, the entire, and Auckland International. We own AIA. I think it's one of the best infrastructure stocks you can own. They actually made a pretty interesting announcement this morning that they've sold their minority holdings in the Cairns and Mackay airports. They got about $400 million for those. And the reason they've done that is that they need to spend about 3 billion Kiwi dollars building a second runway into Auckland, a second terminal, and developing out a lot of infrastructure around the airport. So one thing the market I think has been grappling with a bit is how they're going to fund that. The second thing, and it's going to be a bit easier for them now, but long term, as opposed to say Sydney Airport, where it's really about they'll be able to get more passengers going through, but it's off a much higher base, and it's about trying to get more money out of everyone's pockets. AIA has a huge amount of spare land. New Zealand is, I just got back from New Zealand, it is booming. The tourism industry over there is going gangbusters. And, when they do this second runway, which isn't for another 3 to 5 years, the numbers are just going to keep rising very strongly. It's like having a toll road that Transurban use that still, you know, has 2 lanes that aren't being driven on.
It almost reminds me of Sydney airports 20 years ago,
Yeah.
without the huge retail component of it, the parking.
Yep.
Still has a lot of growth options,
Yep,
whereas Sydney
absolutely.
airports has sort of run out of growth options. But
Yeah, I think they're getting closer to how do you squeeze as much out of that as you can, because it's just every square metre of that airport's now taken up. You drive around Auckland Airport, you know, they've still got 30 minutes of free parking and all this nice sort of things that we used to get, and for whatever reason
what is
it's
free parking.
Free parking.
Bring it back.
Yeah, it's, you know, it's the largest stock on the Kiwi Stock Exchange, AIA. It's like at their Commonwealth Bank. So, you know, I think it's a great business to own. I think it's a good buy on this dip.
Okay, so liking Auckland airports, I guess the biggest thing is what's going to happen in terms of the bond market. Do you ignore that and just have a look at the fundamentals?
I tend to ignore that and look at the fundamentals. The only thing in the short term I would say that's negative about these kind of stocks, like your Sydney airports, your Auckland airports, is they're a little bit boring and the market's quite bullish. So the market will be like, well, I'll get around to investing in that, but in the interim, I could invest in all these more exciting sectors that are going through a tear right now. So I think that's what's also holding it back. But overall, the fundamentals look great. I'll also add, it almost reminds me of Canberra Airport, where I'm from, where it used to be a paddock, and then what the Snow family's done there is phenomenal. They've really developed it. So Auckland Airport does have a lot of growth, as you mentioned. So
yeah, I think that's right. There are parts of this market over 2017 that just got totally left behind, forgotten about, and this year that could actually be the part to own. So you know, a good example that is like the stock we own is AP Eagers, which, you know, is the largest car seller in the country. We had phenomenal new car sales out today. December in Australia was the strongest month in history, and everyone's been calling new car sales to 4. And I think AP Eagers, you know, sort of went up 8 or 9 cents on the back of it. It should have been a much more meaningful rise, but everyone's looking at Afterpay and Bellamy's and, you know, these sort of more glamorous stocks. And inevitably at some stage you will find that money will rotate back into these businesses which have been left behind. As long as they keep going sideways, they keep getting cheaper and cheaper because their underlying earnings are growing. And, you know, they're safe stocks to own in downturns as well, which can be forgotten about.
That's a really good point, that you have these quality companies out there with really compelling growth stories, but the market's more interested in the revenue growth story rather than the profit growth story. So APE, as you mentioned, an interesting one out there, but I'm sure there's a lot out there as well. Now, the other stock is one of Tony Lecantro's, MBK, but shame on this company. It jumped 20% before going into trading halt.
Sounds like a Tony Lecantro stock.
Sounds like someone knew something. Hopefully they don't come out with a meaningful announcement. A material announcement. Meadowbank's a company, $21 million market cap, so a pretty small company out there. But as I mentioned, the stock up 20% before falling into a trading halt today. Any ideas?
Leaky ship, I don't know.
Never even heard of it. I mean, I think Tony's always been very good at saying, send me an email and I'll, you know, I'll shoot you some research and my thoughts on it. So I think he's going to have a better idea than anyone
Hopefully it's
else.
an exceptional drilling result.
On that note, we're taking a short break, but we'll be back to answer more of your questions in just a moment. And of course, if you'd like to speak with us, please give us a call. The number's 1300 30 34 35, or you can email us, yourmoney@skynews.com.au.
You're watching Your Money, Your Call on Sky News Business.
Latrobe Financial, Judge Money Magazine's best mortgage fund 8 years in a row and returning 5.2% on a 12-month investment. Make your money work harder for you. Invest with Latrobe Financial. Call 138010.
There are plenty of booking websites. Your ideal hotel may only be listed on one or on several, but for very different prices. Do you really want to check them all? Instead, use Trivago to compare these offers and find your ideal hotel for the best price. Hotel Trivago.
130 years ago, 7 men gathered in Broken Hill and dared to think big. The company they created was BHP, the big Australian. Imagine what we could all achieve if we continue to think big.
Imagine what you could do with better. A better way to spend your time. A better way to learn. A better way to find what you're looking for. A better way to help you decide. You deserve better. Finder helps you find better with more than 50 categories to compare. Find better.
Want to save time? Well, try our new time-saving way to shop. Now, Woolworths will pick it and pack it, ready for pickup. It's called Woolworths Pickup, and it's free.
That's why I pick up from Woolies.
Turn up the heat during the ultimate BMW 2017 plate clearance with hot opportunities and finance offers available across the range.
Are you ready to commit to quitting smoking today? Try Nicorette Quick Mist from Chemist Warehouse. It starts to relieve cravings from 30 seconds and makes you 2.5 times more likely to quit. Plus, it's easy to use and it discreetly slips straight into your pocket. Right now at Chemist Warehouse, Nicorette Quick Mist Triple Pack is $49.99. Do something amazing today with Nicorette. Live, look, feel well at Chemist Warehouse.
When you want to borrow money, not knowing your credit score before you apply can be a big mistake. Why? Because credit scores are one indicator of your credit risk. If you know you have a high credit score, you may be able to negotiate with a credit provider from an informed position. That's why it pays to get your free credit score. So before applying for a loan, visit getcreditscore.com.au. It takes less than 60 seconds. It's safe and won't affect your credit score. Plus, it's absolutely free. Knowing your credit score before applying for a loan may be able to help you negotiate with a credit provider from an informed position. We connect to Australia's leading credit bureau, so you can be confident in the information we provide. To better understand your borrowing potential, visit getcreditscore.com.au today.
Australia said yes to same-sex marriage. What about coal-fired power, the refugee intake, euthanasia, major drug reform, cutting private school funding, Indigenous recognition, female gender quotas? Have your say. Politics HQ is back, only Sky News Live.
Back with your money, your call.
Welcome back to Your Money, Your Call. I'm Julia Lee from Bell Direct, and joining me on the panel tonight, we're very lucky to have Ben Clark from TMS Capital and John Athanasiou from Redleaf Equities. Time to answer a few more questions, so let's go straight to Steve from Sydney. Steve, welcome to the show. How can we help you out tonight?
Hi Julia, thanks for taking the call. Just like to see if we could get the panel's thoughts on Novarti Group, NOV. They're a fintech company. They're just sort of starting out and seem to be getting a bit of traction at the moment with their revenue. And they might be getting into cash flow positive in the next in FY18. Thank you.
Sure, so an interesting question coming through from Steve on Novarti. NOV is the stock code there. Looking at blockchain-powered global money transfer, a fintech company. Market cap of only about $39 million at this stage, but certainly there does seem to be a lot more in that fintech space trying to shake up the industry and offer disruption. I guess here in Australia it's a little bit harder to do because of the big banks' dominance, but certainly over in the US and overseas, we're seeing a lot of fintechs making some ground at the moment. John, what do you think?
Listen, I've spoken to the management a few times. I don't mind Novarti, but I do find the business a little bit complicated. There seems to be too many fingers in too many different pies. You know, they mentioned opportunities in the blockchain. For me, what are the aspect of the business that I don't mind, but I want to see the revenues come in before I get really heavily involved in it, is they've got a relationship with WeChat, which is the world's biggest social media provider in China. So the deal with that is if they convince more Aussie retailers to use WeChat as a payment system, revenues will go up, or should go up, given the number of Chinese tourists that we have. So I really want to look at that side of the business before I get really excited, but it does look okay to me, just a little bit complicated because they're in so many different things.
A smaller company and lots of excitement over, I guess, new technology as well as cryptocurrency wallets, blockchain and technology.
Yeah.
Any thoughts around this space or navigating this space? Some of this technology will survive, some companies will survive, but many of them probably won't.
Yep, I'd be avoiding it. Like, I reckon there's a massive bubble happening in this area of our market. And yeah, you know, suddenly there's all these companies saying they can do blockchain. There's junior resource stocks who are suddenly becoming blockchain experts or Bitcoin experts. It's just got all the hallmarks of a bubble. But the thing is, Julia, bubbles can go on for much longer than you ever expect they will. So stocks like this could double, triple, quadruple from where they are today. But I would be avoiding. At some stage, the bubble will burst, and you know, I'd be surprised if there's. I think there'll be very few that are left over. So they'll all suddenly become uranium producers or explorers or something like that. So, but, you know, look, I should say I don't know this company from a bar of soap, and I've got no idea what it does. But I'd just be very wary of the number of companies we're seeing who are suddenly crypto experts.
And that's a very fair point. So that's why I think it's more important to look at the WeChat side of their potential revenue growth than the whole blockchain side of it. Yeah.
On that very interesting note, that brings us to the end of the first hour, but we'll be back after the break with another hour of Your Money, Your Call. Ben and John will be staying on to answer your questions, so make sure you give us a call. The number's just on your screen there, 1300 30 34 35. Stay with us.
Information presented on this program is general in nature. Viewers should seek their own professional advice before purchasing products or services. The producers of this program may receive a fee for commercial arrangements with companies featured in this programming. You're watching Sky News Business, Australia's business channel.
130 years ago, 7 ordinary men gathered in Broken Hill and dared to think big. The company they created that day was BHP, the big Australian. Today, the same hard work and imagination so valued by our founders has seen us grow into Australia's global resources company. Imagine what we could all achieve if we continue to think big. Think big.
Creating your next holiday with Escape Travel is even better with our exclusive Escape fares. Tailor and save by bundling your choice of flights with cruise, tours or accommodation. And get your tailor-made holiday for less. Escape Travel. Tailor-made.
Turn up the heat during the ultimate BMW 2017 plate clearance with hot opportunities and finance offers available across the range.
Are you ready to commit to quitting smoking today? Try Nicorette Quick Mist from Chemist Warehouse. It starts to relieve cravings from 30 seconds and makes you 2.5 times more likely to quit. Plus, it's easy to use and it discreetly slips straight into your pocket. Right now at Chemist Warehouse, Nicorette Quick Mist Triple Pack is $49.99. Do something amazing today with Nicorette. Live, look, feel well at Chemist Warehouse.
This couple met on a paid dating site. Jen and Luke met for free on Plenty of Fish. Happy couple, happy couple. Why better meet someone? plentyoffish.com.au. Simple, free, and it works.
Want to save time? Well, try our new time-saving way to shop. Now, Woolworths will pick it and pack it, ready for pickup. It's called Woolworths Pickup, and it's free.
That's why I pick up from Woolies.
It's clear-cut Rivers clearance. Now we take a further 30% off. Footwear from $5.59, clothing from $3.49, and accessories from $1.39. It's our ultimate clear-out. Limited time only at Rivers.
Can you put a price on your dreams?
I wanted to see what you'd do, and you didn't disappoint.
Foxtel Movies celebrates Heath Ledger with a special pop-up event featuring all of his films.
Heath lived every moment to the fullest.
Spend 4 days with an Australian icon.
Yes!
Well, I guess I'll see you around, huh?
Heath Ledger starts 6 a.m. Friday on Channel 400.
Live from the moment it breaks.
The White House is in damage control.
Till every detail is revealed. Always rely.
In breaking news, there are reports North Korea has...
On our unrivaled live coverage. Presented on this program is general in nature. Viewers should seek their own professional advice before purchasing products or services. The producers of this program may receive a fee for commercial arrangements with companies featured in this programming. Now, Now on Sky News Business, this is Your Money, Your Call.
Welcome back to Your Money, Your Call. I'm Julia Lee from Bell Direct, and joining me on the panel tonight we have Ben Clark from TMS Capital and also John Athanasiou from Red Leaf Equities. And of course, if you have a question about shares, our phone lines are open and the number's just on your screen there, 1300 30 34 35, or of course you can also email us yourmoney@skynews.com.au. We'll be here at the desk till 9 p.m, so make sure you get on those phones and give us a call. And someone who's given us a call is Ben from Brisbane. Ben, welcome to the show. How can we help you out tonight?
Hi guys, thanks for taking my call. Love the new haircut, Julia.
Thanks, Ben.
Just had a question about South 32. I rang a few months ago actually to get advice, and Julia sort of advised me to hold and look at buying in the dips. And you know, I initially bought in at around 95 cents.
Wow. That's great.
Yeah, and I mean it's just pushed up from there, and it's around that $4 mark now, and I just wonder whether I should keep holding or whether I should reallocate. You know, but the thing is, I can't see a lot of value around, and I don't know, maybe I should just build the war chest. But yeah, I guess that's the first question. And if it's not too cheeky, I was just wondering if I get the panel's advice on Horizon Oil. The code is HZN. Just if anyone had any ideas about that.
Congratulations, Ben. An amazing.
From the moment it breaks,
The White House is in damage control.
till every detail is revealed, always rely
In breaking news, there are reports North Korea has...
on our unrivaled live coverage. Presented on this program is general in nature. Viewers should seek their own professional advice before purchasing products or services. The producers of this program may receive a fee for commercial arrangements with companies featured in this programming. Now on Sky News Business, this is Your Money, Your Call.
Welcome back to Your Money, Your Call. I'm Julia Lee from Bell Direct, and joining me on the panel tonight we have Ben Clark from TMS Capital and also John Athanasiou from Red Leaf Equities. And of course, if you have a question about shares, our phone lines are open and the number's just on your screen there, 1300 30 34 35, or of course you can also email us yourmoney@skynews.com.au. We'll be here at the desk till 9 p.m, so make sure you get on those phones and give us a call. And someone who's given us a call is Ben from Brisbane. Ben, welcome to the show. How can we help you out tonight?
Hi guys, thanks for taking my call. Love the new haircut, Julia.
Thanks, Ben.
Just had a question about South 32. I rang a few months ago actually to get advice, and Julia sort of advised me to hold and look at buying in the dips. And you know, I initially bought in at around 95 cents.
Wow. That's great.
Yeah, and I mean it's just pushed up from there, and it's around that $4 mark now, and I just wonder whether I should keep holding or whether I should reallocate. You know, but the thing is, I can't see a lot of value around, and I don't know, maybe I should just build the war chest. But yeah, I guess that's the first question. And if it's not too cheeky, I was just wondering if I get the panel's advice on Horizon Oil. The code is HZN. Just if anyone had any ideas about that.
Congratulations, Ben. An amazing run, 95 cents to $4 on South 32. Question is, should he be staying in or should he be getting out? And a really good point by Ben that there is a lack of opportunities around. If you get out and the show keeps on going on, you're just going to end up buying in at a higher price, which I've done a number of times before. So South 32 and Horizon Oil. I guess, Ben, looking at the resource space, and you know, when you look at the late part of a bull market cycle, it's typically energy commodities that run pretty hard.
Absolutely. Yep, because that's when all of the growth is starting to really accelerate around the world, and you get strong commodity prices before you tend to get central banks slow it down, and you get the... So South 32, I think, is probably one of the better resource stocks to own if you're going to own one. Graham Kerr, who was the CFO at BHP and has taken over running this business, I think has done an amazing job, very well regarded in the industry. And you know, some of the recent news that they're going to spin off their South African coal mines, I think, has been well received. And so what he's continuing to do is run assets that BHP had little time or energy to even look at because they were so small to BHP, but to South 32 they're meaningful, and that he's running them a lot more efficiently and a lot more profitably. And he's also slowly simplifying the business, or not the mess, but certainly a strange collection of assets that he took over. So, you know, I think you've got a great management team. You've got, you know, a still good collection of assets, but they're not those tier 1 assets, which is why BHP didn't want them. And, you know, I think it'll probably perform stronger than its counterparts. What resource stocks do in 2018 is another interesting question, but I think South 32 is one of the better ones to own in that space.
Okay, and I guess one of the big things with South 32 is the amount of cash it has. I think it's about $1.4 billion worth of cash. Does that worry you, Ben, at all?
No, because I think at some stage they will start to spit that back out to shareholders. Because I think he's been, you know, the articles I've read about him, he's been very shareholder friendly and putting shareholder interests first. And I think he probably saw some things happen at BHP which he either didn't agree with or certainly learned a lesson from. And you know, I think a balance sheet with that firepower, there's going to come a stage where he'll have to either spend the money on something or start to return it to shareholders, and I think it's probably more likely the latter.
I mean, if he does return it to shareholders, shareholders love getting money back from resource companies. South 32 is seeing the stock already at an all-time record high, I believe it is today. What do you think?
Oh, what a phenomenal jump that they've done on so-called tier 2 assets. I mean, he got the leftovers and look what he's done with them. Phenomenal story. The big question is what they're going to do with cash. And there is a tendency to shareholders forcing management's hand typically to do the wrong decision, i.e. tell them to pay them a big fat dividend when they shouldn't, when they should be buying quality assets at the low, or vice versa, buying assets at the high. So that's the biggest question in my mind, other than where resource price is obviously going on South 32. I'd still be holding on until I see an indication of global economic growth slowing down. But at this stage, yeah, I'll definitely be holding, and I'll be monitoring on what the manager's going to do with the cash.
Okay.
And another point I'd just make on it is so often you see when there's a demerger, the smaller part of the business that's demerged outperforms the larger part that it was meant to make more sense for. You know, it happens, I reckon, 90% of the time. You just get this collection of little businesses that weren't seen as core, that someone else comes in and runs hard, you know, and we own Dulux, which is spun out of Orica and has torn the pants off Orica since it listed. And, you know, one we've quite interested in, what we bought into, is Domain, which just got spun out of Fairfax. And you can find these businesses under their own steam. It starts to build up their own culture and those sort of things. They really outperform, and it's always a good hunting ground, I reckon, and something, you know, for potential investors to keep an eye on.
And the other one's Horizon Oil. Now, Ben, you said that you're probably taking profits on some of the energy stocks. Would that be the case for something like Horizon? I know throughout FY17, it probably wasn't the best position, but they had quite a bit of hedging, which you don't want in a rising oil environment. So they were selling oil still probably around the 50s at some point in FY17. It is a new year.
Yeah.
What do you think of Horizon?
Look, I don't know much about Horizon, I'd have to say. Oil Search, I think, looks pretty good. Origin, I think, looks good. And then there's a lot of like mid caps, and there's Santos, which I'm not a big fan of. So, you know, I think they're the two that I'd go for, but I know they're more boring, and that there's probably ones you get more bang for your buck. And you know, Seven Group as well, which of course bought stakes in all of these when the oil price was on its knees.
What a great move, yeah. Looking at Horizon, the shares are up 96% over the last 3 months.
Wow.
Yeah, I'd be too tempted. I'd have to take profits when it goes like this. I know I like following the upward trend, but when the market caps are that small, in such a volatile space, i.e. commodities, you'd have to be inclined to take profits at these levels because it doesn't take much for it to pull back and quite quickly.
Okay, so take profits on Horizon. South 32, would you be buying in at these levels? All-time record highs?
No.
I'd be holding.
I'd be holding. And as we've seen, Julia, in 2018, there'll probably be at least 3 or 4 decent corrections in the commodity cycle. And stocks like South 32 could easily fall from $4 to $3 or, you know, low threes. I think we saw it several times last year. So commodities are always the thing. You want to get interested in them when everyone hates them, and you want to get really wary of them when times are really good. And so I'd probably be a bit more wary at the moment.
Okay, so a couple of interesting stocks that have just shot the lights out in terms of share price performance, and that's South 32 as well as Horizon Oil. So fantastic job, Ben, on getting in on these stocks and holding them. Our first email for the second hour of the show comes from Kuresh, who writes, could I have your thoughts about Transurban and Insurance Australia Group? Now, I know we've already talked about Auckland Airports. Transurban's another one of those bond proxies, but seeing quite a lot in terms of development opportunities over in the US. The share price once again impacted by what was seen in the bond markets last week. In fact, falling recently from $13 down to $11.50. They are looking at a toll road extension in Virginia, but look, it doesn't seem to have put a rocket under the shares. John, what do you think?
Yeah, as I was saying earlier, I think it's just in a boring space right now, and everyone wants more exciting areas to be in. So that's what's holding stocks like Transurban back. But that probably presents itself a good opportunity to buy. Just don't expect anything spectacular from a share price movement in the short term, but it will have its day in the sun, and in a year's time it'll probably look like a good buy at these levels.
Okay, I mean, Ben, you liked Auckland Airports.
Yeah.
Talking about the big bond market being over, what about Transurban?
Yeah, I mean, we saw a genuine spike in bond yields right around the world over Christmas. And with that, we have seen, 10 to 15% sell-offs in Sydney, AIA, the property such, all the stocks I mentioned earlier. I think this is probably a buying opportunity as well. What has to happen for these stocks to have the next leg down? The bond market has to move, the bond yields have to again move significantly higher, and I just don't know. I'm of the view we're in rising interest rates, sure, but I don't think central banks are going to let that get too out of control. And we've seen in the past that bond markets have had these spikes on concerns about inflation and forward interest rate curves, and big sell-offs in bond proxies, and it's been a good buying opportunity over the last few years. Not saying they'll bounce back, I don't think, as quickly as they have in the past, but I think Transurban is an excellent business. It's incredibly well managed. It could get a bit cheaper, but I'd be starting to put a bit of money into it.
So, Ben, would you apply that across the board? Because looking at the year to date, the worst performing areas have been those areas which are impacted by the bond market.
No, I'd be getting interested in
property, utilities.
Yeah. I don't know so much about property. Sydney Airport, I think, is starting to look interesting. That's fallen from $7.50 to $6.60. You also got to remember these stocks all went ex-distribution over the Christmas break. So part of the reason for that has been that. Two others that are kind of interesting to me now, APA and Horizon, AZJ. They're both facing regulatory issues on top of the bond proxy unwind. So their share price drops have been much more violent than the others there. But, I tend to think the market can get too concerned about regulatory changes, and you can find it's not as bad as it was thought to be. So I'd be chipping money across this space. For an income-conscious investor who's really just trying to get a good yield and a bit of growth over the long term, and don't expect anything amazing from these stocks, I think entry prices don't look reasonable.
And I guess the fear, John, here is that we will see a bigger move in terms of bond yields, and you could potentially see another sort of 20% coming off some of these prices if we do. Yeah. Do you foresee that coming? up, or is it going to be slowly steady? I think the markets are even pricing in one rate hike here in Australia this year, which I don't think is going to happen.
Listen, it could potentially fall a further 10 to 15%, but I think that's quite unlikely. So in that scenario, what you do is you just buy, if you had, you know, 100,000 or whatever it is, available to invest in this particular stock, just put a small portion, like 10, 15%, in case you got the pricing point wrong, and then you could average in at a lower price if it goes against you.
I mean, moving to the other end of the spectrum, as bond yields go up, the insurers do well because they make more money in terms of the earnings from their investment portfolio. And I guess the company that makes the biggest percentage of their earnings from their investment portfolio is QBE Insurance, followed by Insurance Australia Group. But what a stellar job Insurance Australia Group has done over the last 52 weeks. The stock is up by 15%. That's compared to QBE, which is a giant in this space, which has traded pretty flat, and Suncorp Metway, which has been flat in that time as well. QBE has actually been down 15% in that space of time. So Insurance Australia Group, the clear leader here. Is it just all about those reinsurance deals that it's managing to do, that Berkshire Hathaway deal? Is it trading at a premium now? Would you be buying in here, or would you be taking profits, John?
I'd probably be taking profits at these levels and be moving into other ones that, in my opinion, should be catching up to IAG. So the peers that you just mentioned a moment ago, I'll be moving funds towards there with the profits I made with IAG if I was interested to be in this insurance sector.
So which insurer would you?
QBE.
QBE?
In particular. They seem to be a well-managed organisation, you know, from my opinion. But yeah, I think IAG's, you know, it's all the reinsurance and so forth that's like keeping it at these heightened levels. So yeah, I'll definitely be taking profits and moving it into other areas.
I mean, the last couple of months we've seen QBE Insurance as well as Suncorp, the share price coming under a bit of pressure. Insurance Australia Group has just managed to go sideways. They're still managing to hold on to that premium in this space. What do you think of the insurers?
It's complicated. Like, I think all of the companies have got different opportunities and different threats. IAG, I think, has held up better because it's pretty much purely in Australia and it hasn't had the big natural disasters that we've seen offshore. And we've got a pretty healthy economy here, and I do think it's got to do with the reinsurance, Julie. It's a much safer stock now. They don't take on the risk in their insurance book that they historically used to, and it's well managed, it's well capitalised, pays good dividend yield. You know, there's reasons to be there. QBE, I mean, I don't reckon QBE's been well managed. You know, they've got a new CEO again now, you know, my view is that they should have a really good year this year. If they don't this year, I think you give up. Seriously, because whether it was good luck or good management, QBE a year ago took out reinsurance, I'm pretty sure, for 2 years in America. So when all these big natural disasters hit in 2017, reinsurance rates they reckon will lift by 20 to 25% this year, and QBE's locked in at much lower levels. So. And then you've got bond yields starting to rise in America. So if the tailwinds aren't blowing now, and if we're told, you know, the QBE says a 1% increase in bond yields equals $280 million more profit per annum, well, bond yields have risen, what, 40, 50 basis points recently? So that's $130 million in profit, and the share price has done nothing. It's actually fallen. It should be going up. So I just think the problem is that the outlook to me looks the best I've seen it for QBE. They keep finding these issues in their insurance books, which you just cannot predict or forecast. And so, you know, the last guy John Neal lost a job over it, and hopefully Pat Reagan, the new CEO, has better luck than the previous 3.
I don't know. We'll be back with more after this short break. If you'd like to speak to that expert panel, now's the time to give us a call on 1300 30 34 35, or you can email us, yourmoney@skynews.com.au.
No matter the journey, big or small, the Volvo XC90 keeps you a step ahead. With built-in intelligence like Park Assist and 360-degree camera, outsmart every journey.
QuickBooks introduces Jeanette and her mobile wedding business. She travels far and wide to celebrate I-dos, But Jeanette hates copying all those trips into a logbook. So now Jeanette uses QuickBooks Self-Employed. It tracks her business kilometres automatically. She categorises trips with a swipe and is ready for tax time. Wow, I've never seen tracking mileage look that easy. Way to grow, Jeanette. Never touch a logbook again and save 50% at quickbooks.com.au.
At BHP, we work hard to support our communities. Because it's their support that helps us deliver the benefits of Australia's natural resources to all Australians.
I know a lot of people are relying on us.
If the school wasn't here, none of the kids would be here.
Imagine what we could all achieve. We continue to work together and think big. Think big.
Oh, 4B2. Shavings. The Sabco Bulldozer range is tough enough for any clean-up on any worksite, even this bitumen job. Sabco, keep it clean. Available at Bunnings Warehouse.
Accidents happen, and whenever they do, Budget Direct customers get a 24/7 phone and online claims service. But not everyone's a Budget Direct customer.
Hey, buddy. Hop over to the farmhouse. Get Risky some help. You writing this down? Whoa, no, come back. No, wrong way.
Do you get a 24/7 phone and online claims service? Get more with Budget Direct, Money Magazine's Insurer of the Year.
Turn up the heat during the ultimate BMW 2017 plate clearance with hot opportunities and finance offers available across the range.
Can you put a price on your dreams?
I wanted to see what you'd do, and you didn't disappoint.
Foxtel Movies celebrates Heath Ledger with a special pop-up event featuring all of his films.
Heath lived every moment to the fullest.
Spend 4 days with an Australian icon.
Yes!
I guess I'll see you around, huh?
Heath Ledger starts 6 a.m. Friday on Channel 400.
Live from the moment it breaks.
The White House is in damage control.
Till every detail is revealed. Always rely
In breaking news, there are reports North Korea has...
on our unrivaled live coverage. Back with Your Money, Your Call.
Welcome back to Your Money, Your Call. We are still taking your calls. The number's 1300 30 34 35. And of course, you can email yourmoney@skynews.com.au. We now have Brett on the line from Melbourne. Happy New Year, Brett. How can we help you?
Thank you, Julia. Love Your Money, Your Call. I just have a question in regards to adding a healthcare stock to my portfolio.
Sure.
I've identified API, Australian Pharmaceutical Industries, as a possibility. I noticed that it's trading near its 52-week low, and it also has a decent dividend. I was just wondering what your thoughts are on API, please.
Sure. So having a look at API, it's actually an interesting one because even though it's in the pharmaceutical space, it's also in the retail space. It owns Priceline out there. And I guess one of the things that's been a standout during this confession season is a number of upgrades we've seen come through from the retailing space. We've seen Lovisa, Noni B, just to name a couple. And I guess there's a bit of speculation that perhaps that Christmas, New Year's trading period was a little bit better than expected. Of course, API, you still have the potential regulatory risk with the pharmaceutical side of the business and the changes that we see there. John, looking at API, what are your thoughts?
You know, it could be all right. It could be a turnaround, but my only concern is it's in a very competitive space. I think Chemist Warehouse absolutely dominates it. I think there's a greater product range, better pricing, and from my understanding, API's margins are very slim, like we're talking 5%. So it's a very tight margin game, so there's not much fat there at all. So that's my only concern. But in saying that, it is an attractive dividend yield, and they have been a pretty poor performer, so they might be able to turn around.
Okay, I mean, last year they tried to take over, I think, laser clinics as well, and that was unsuccessful. But really, I guess a lot of the focus at the moment is on the retail side of the business. what are your thoughts on API? Opportunity here, or?
No, I'd avoid it, Julia. I wouldn't call this a healthcare stock. I agree. I'd call it a retailer. And, you know, this is a very tough business, I think. I think John's absolutely right. Chemist Warehouse has absolutely decimated the competition. Ramsay is also aggressively moving into pharmacies, particularly around its hospitals at this stage, but it is going hard into that space. And, you know, I think it's a very hard grind, Julia. So that there'll be a point at which a stock like this gets oversold and it probably gets too cheap and it could have a bounce, but it's not, to me, a stock that's going to do well long term. And, you know, Soul Patts, which, you know, we've got a big holding, and they've been a long-term investor in API, and I think they actually sold out recently. And it's worth noticing when they do things, because they don't do them lightly. They're very patient, long-term investors.
They do tend to be long-term investors. So API, the stock go there, of course, owning Priceline, a vertically integrated provider in this space. So they've got the wholesale business, they're a franchise owner as well, and a retailer through that Priceline brand. We now have an email here from Ed, and Ed says, this is a question on 5G networks. Can I please have your thoughts on 5G networks? 5GN is the stock code there. It is a smaller stock, but it has absolutely shot the lights out. Having a look at the share price performance of this particular company.
80 cents.
Oh, wow. It came onto the market over in November at 20 cents. It's now at 80 cents. Have we all missed the boat, John?
Oh, I'm absolutely kicking myself. I had the opportunity to participate during this IPO. Silly me, didn't, because I was like, I typically don't like doing IPOs during the Christmas period. I just feel all brokers want to get their, you know, their bonus for Christmas. But geez, I got this one wrong. Look how it performed. The market cap is quite small though.
Tell us a little bit about this company.
Well, they're trying to compete. In the name, you can see that they're trying to be more like a wireless, move into the 5G network. So that's their niche, so to speak. I should have spent more time in the prospectus, to be honest, otherwise I'll be holding the stock. But it has run pretty hard, but broadly speaking, I think the telecommunication space, I mean, you look at Vocus and so forth, it looks like to be one of the recovery stories, broadly speaking. But with 5G and specifically, I think it's run really hard, even though the market cap's minute. I'd be waiting for a pullback before I'll be getting involved in that particular stock.
Okay, so does it own its own infrastructure? It's a reseller of services?
Reseller of services.
From, I guess, Telstra?
Yeah.
So I guess looking at a reseller to businesses, I assume, fibre optics, wireless, telephone services, what do you think of this?
I've never heard of this company. I know
it's a newbie to the market,
it's only just
totally
floated,
understandable.
and it's tiny. So, look, I couldn't, I mean, 5G is talked up as the next big thing in the telco space, and threatens to seriously mess up the NBN, which is already messed up as it is. So, you know, I think if the NBN Co and the government can't get their act into gear, that they really risk turning the NBN into a massive white elephant, because I think all the telcos will just push 5G wireless to their customers rather than the NBN, and it'll be cheaper and quicker, and we'll all wonder what we spent $50 billion on. So anyway, but look, I'm going off the topic. I haven't heard of 5G.
What do you think of the telco space?
I think it looks interesting as well. I think it's the one area of the market that does look cheap, and these previously were seen as fantastic growth stocks. They're obviously not growing at the moment. They're dealing with predominantly the issues that have been created out of the mismanagement in the NBN and some mismanagement on their own behalf. But I think the announcements that we've been getting out of, in particular, Vocus and TPG have become a lot more, I think, optimistic. There does seem to be a turnaround at the company's levels. The stocks don't look expensive, particularly when you look at where they used to trade. And I think it's an area of the market that could have a really good calendar year 18. So I'd be more positive than I have been, and I think the government has to do something about the NBN. It's going to become a huge election issue if they don't. And any sort of improvement in or help with the ISPs and selling the NBN is going to be a big benefit to their businesses.
Having seen a lot of those telco companies coming back a little bit now, is that already priced in?
I don't think, I think it's, not yet, Julia. I think everyone got so, myself included, got so badly burnt in the last couple of years with telcos that there's still a lot of scepticism and wariness. But this is what you tend to see is companies, they call it climbing the wall of worry, right? So everyone's worried about them and doesn't want to know about them, and the share prices start to move higher. And if you look at Vocus, Gilead, which is a really well-regarded fund manager out of Hong Kong, has taken like a 16% stake in it now. The founder is on the board of Vocus. Bowen has gone back to chairman. And I think TPG is going its own path with the move into mobile. So, it's an interesting area, and I just think the companies are overcoming the issues that they've had to deal with, and they're finding ways to try and get the businesses going again.
Okay, so climbing the wall of worry, I feel like we should all be climbing. But a good visual for that telco space, which has been fighting back. And we'll be back with more after this short break. If you'd like to speak with our expert panel, our number's 1300 30 34 35, or you can email us, yourmoney@skynews.com.au.
You're watching Your Money, Your Call on Australia's Business Channel.
At BHP, we work hard to support our communities because it's their support that helps us deliver the benefits of Australia's natural resources to all Australians. Think big. Think big.
Only customers get a hire car when their car is stolen.
Nailed it!
Get more with Budget Direct, Money Magazine's Insurer of the Year.
This couple met on a paid dating site. Jen and Luke met on Plenty of Fish. This couple spent over $100 a month. Jen and Luke spent nothing. Happy couple? Happy couple. Why pay to meet someone? plentyoffish.com.au. Simple, free, and it works.
When you want to borrow money, not knowing your credit score before you apply can be a big mistake. Why? Because credit scores are one indicator of your credit risk. If you know you have a high credit score, you may be able to negotiate with a credit provider from an informed position. That's why it pays to get your free credit score. So before applying for a loan, visit getcreditscore.com.au. It takes less than 60 seconds. It's safe and won't affect your credit score. Plus, it's absolutely free. Knowing your credit score before applying for a loan may be able to help you negotiate with a credit provider from an informed position. We connect to Australia's leading credit bureau, so you can be confident in the information we provide. To better understand your borrowing potential, visit getcreditscore.com.au today.
Right now, 1 in 7 young Australians are living in poverty.
Mum. Mum.
Oh, sorry, sweetie.
I love you.
You could look away, but then nothing will ever change. Be the one to change her life. Sponsor an Australian child through the Smith family today.
Turn up the heat during the ultimate BMW 2017 plate clearance with hot opportunities and finance offers available across the range.
Getting hammered with ridiculous interest on your credit card? Yeah, me too. But check this out. With Finder, you can finally make that change to a better credit card. Just drop in your balance and interest rate and Finder instantly calculates what the banks are offering. A couple of clicks could save you hundreds or thousands a year in credit card interest. One more click to apply. Find better.
Now, back with Your Money, Your Call.
Welcome back to the program. Joining me on the panel tonight, we have Ben Clark from TMS Capital, John Athanasiou from Red Leaf Equities, and of course, if you have a question you'd like answered, give us a call. The number's on your screen there, 1300 30 34 35, or you can email yourmoney@skynews.com.au. And we now have Luke on the line from Melbourne. Luke, welcome to the show. What's your question for our panel tonight?
Hi, I was wanting to get, if I could please get Ben's opinion on when would be a good time to buy Technology One, Solpat, and Magellan Financial Resources, please. Thank you.
Okay, so looking at timing, Technology One, Soul Patts, as well as Magellan, when would have been, well, the best time to have bought would have been 3 months ago, right? Yes. What would you be comfortable buying now? Are you waiting for any indicators? Technology One's an interesting one.
It is. It is. It's actually on my list to do a proper look at this year. I'll make a list over the holidays, and because I keep hearing from particularly other guys on the show who I think got good track records that it's a great business to own. It's always looked expensive to me with not much growth. There's got to be something there. So Luke, maybe if you want to give me a call back in the next couple of weeks, I'll hopefully have a bit more light I can shed on that one. We don't own Technology One. I've owned Soul Patts for years. Soul Patts is a great business in it. For whatever reason, it's quite volatile in the short term, its price, and it gives you lots of opportunities to average money into it. So from memory, it's about 17 bucks at the moment. It's pulled back from 18, you know, for no real reason. I would say the underlying components of Soul Patts are Brickworks, TPG, and New Hope. And all three of those are really starting to pick back up. And Brickworks is flying. A lot of cash, good equity portfolio. So Soul, I think, at some stage you'll probably get a bit cheaper. Would be a good entry point. Magellan, we also own Magellan, and I'd be looking for a bigger dip. Again, it moves around a bit. The reason it hasn't recently is we haven't had a decent correction.
There is no dip.
Well, when are we, you know, there's been no, I mean, international fund managers' share prices are very closely aligned to what international share markets are doing for obvious reasons. And last year was just the weirdest year we've ever seen in America, haven't we? Every single year last year in America had a positive performance.
Would you call Magellan a bull market stock, like it goes with equity markets?
I think it is now, because like it wasn't before, because it could still grow its FUM in weak markets, good markets, but I think it's probably getting closer and closer to, you know, like capacity.
Yeah.
And once it hits, well, the flow starts to slow. It's going to ride the ups and downs of the market.
It should have been a poet, Ben. Flow starts to slow from Magellan Financial Group. I guess you get so big that you become the market. And essentially with Magellan, you're leveraged to that, I guess, the global growth story, which is being powered along by the US stock market, or the MSCI, which is being powered along by the US stock market. Technology One, Soul Patts, as well as Magellan Financial Group.
Technology One, I also have to do a bit more homework. I'm not completely on top of that one. Soul Patts, well-run organisation, and they've got 3 key holdings that looks to be turning around. And Magellan, I'll be holding it until I think the equity markets are turning a bit bearish. I do consider it a bull market stock. That's not a criticism of Magellan. It's just the way that since this company's grown so fast, fund flows increase as equity markets keep on rising. So that will only turn once the equity markets pull back a bit. So that doesn't seem to happen anytime soon at this stage. So yeah, I'll be holding on to your Magellans.
Look, I think this is a really hard question that's come through from Luke. I mean, Technology One, you know, the panel is interested, but no one's really had a look at it. And I guess the problem with Technology One is it's in this tech space, which has been absolutely booming along. You only have to look at the NASDAQ over in the US, or Aconex over here, which has seen a takeover offer, and, you know, it's lifted all ships. But Technology One's one of those tech stocks that's had a few problems in the last 52 weeks. Yeah. So while all of them are trading at these lofty multiples, it's probably one that's looking relatively cheap out there on the market. Having said that, you know, its consultancy business is the one area that's let it down, and that's where you have to see the bounce back in revenue, especially in terms of the UK. This earnings season is probably going to be a key one. And looking at the share price action, it looks like there might even be some more downside, which is really weird when you're seeing all the tech stocks rising. So a bit of a contrarian. The other thing is there's not that many technology stocks on the ASX. So if you pick a few good ones, we were very lucky to pick MyPhysique. That's a small cap that's run very, very well.
but there are not many out there. And once you latch onto someone, they can really fly. I mean, you know, our market's dominated by resources and the big four banks. So when you find a good tech stocks, you hold on to it, especially when you compare it to like the NASDAQ, which has been absolutely flying.
So technology one interesting, but you know, people are still probably not fully convinced, probably want to see a bit of a turnaround in the consulting business. So it looks like, you know, we all like the underlying investments, and the share price hasn't risen as much as the share prices of the investments, so that looks good. And then Magellan Financial Group, as long as the market keeps on running, right, and we don't have a correction, we like the stock. Let's go to our next caller. We have Angelo from Brisbane on the line. Angelo, welcome to the show. How can we help you today?
Hi, Julia. Thanks for taking my call.
Julia,
I've got a question on two stocks. One is a food company. It's called Best On Global, BFC. It's an Australian company trying to sell its produce into Asia. And the other one is Sandfire Resources. I know it's a commodity stock, but it's got a lot of cash. It's a C1 producer, and I wonder if it's worth a long-term hold as part of the whole electric car lithium story as well. Thanks for taking my call.
Really interesting question from Angela from Brisbane. Let's start off with Best in Food Group. Look, this is a relative newbie to the market. I think it got together in 2015 and floated on the market. And from memory, they wanted to start buying into different food themes, to be an exporter and have its platform and distribute into Asia and run with that theme. I haven't really tracked it since then, but I know the IPO price was 35 cents and it's currently trading at 25.5 cents. So it looks like it's traded sideways throughout the last year. We know that there's been lots of food type companies doing well into Asia, and a couple of ones that have also just not done so well, and you know, Clover comes to mind, not really benefited like some of the A2 Milks, the Bellamy's of the world, the Blackmores, the BMXs, the BWXs of the world. Where does Best in Food Group fit into this picture, Ben?
Look, it's not one I've been, Julia, and you know, you're right, it's been a really mixed bag. Another one's Murray River Organics, you know, which I think was floated at $1.20, it's got down to 30 cents or something. And like, we can all understand the idea of selling high quality Australian produce into the Asian market, but it's a lot harder than people think it is, you know. And the thing I think when you look at some of these companies is there's this kind of mismatch of brands and products, and you know, you've got to be a salmon farmer and a sultana producer, and it's a hard grind. You know, you speak to farmers, farming is an incredibly hard source, and the marketing and the expertise that you've got to have to market into China, it's not easy. So, you know, I think it will be a tough grind, but you only need one product to suddenly take off and things can turn around, but it's not one I'd be sticking around for.
And look, that's the key, because at the end of the day, food's just a commodity. Unless you can actually market it and get that premium, essentially you're like a supplier to supermarkets, which in Australia you are. It's difficult. They're going to take away as much margin as they can. If they can just sort of swap you around with a different supplier that's going to offer
And that's the question. I mean, can they become a premium brand to crack into those Asian markets and you know, sell their product at a higher margin, as like your A2 Milks have done? I think it'll be a very tough grind for them, so I'd probably be avoiding them at this stage.
So they've had a pretty difficult time, but they are trying to create shareholder value and turn around that business. The other company is Sandfire, and of course, you know, they call it Dr. Copper, the only base metal with a PhD in economics. And look, Sandfire has been doing extremely well. I'm having a look at Sandfire Resources, and today the high was $7.38, so 2 cents off the week high, but you know, 9 cents off the year high, and not that far away from an all-time high. Well, a little bit, $9.09. Copper, what do you think?
I think copper looks good, you know, because copper is the proxy for for economic growth globally. We know that there are less and less copper mines being discovered, or less copper discoveries, and the discoveries that are out there getting harder and harder and more expensive to mine. The issue that Sandfire has, though, is that their mine is going to be mined out in the next couple of years. And what's, you know, when the Angelo's sort of saying, oh, I like the long-term story behind it, I'm a long-term investor, that's great. But the reality is that this is not a long-term project. It's only, I think, got another 2 or 3 years to go, and then the company's going to have to work out what it's going to do. So this is a tricky time for a mining company. You know, do you just return the cash to the shareholders who have been patient and sitting there, or do you look to spend that money on the next project, and then you've got to go through all the milestones that Sandfire went through, you know, back during the GFC. So that's the issue that they face. But in the short term, I think copper's probably going to do okay. And Sandfire is a very low cost, very efficient, very well managed, and very strong balance sheet producer of copper. So I can't see the run ending.
So you'd be buying in here?
I wouldn't be buying in because, again, it's commodity stocks are something that we generally don't hold a lot of. But I look at them, and I think this one is a lot better than most. And if I was keen on the copper story, this would be right at the top of the tree for me.
Okay, Sandfire?
Listen, Sandfire looks really good to me. I'd be waiting for a bit of a pullback, and I do like the fact they've got a lot of cash. But as Ben mentioned, you know, the operation seems to be running out in a few years' time, so they're going to have to use that cash somehow, either to give it back to the shareholders or find a new operation somewhere. But in the short term, it's a global growth story. You need copper for economic growth, so I think it looks okay. I wouldn't be rushing into buying it, though.
I mean, I guess we often look at Oz Minerals or Sandfire. If you had to pick one, which one would you pick, John?
I'll go Sandfire.
Yeah, I think I probably would as well, but they're quite similar. But I mean, Prominent Hill at Oz Minerals is also getting very close to running out of copper. They also have a lot of cash, but they also have a plan as to, you know, where the next project is going to be, and they're starting to develop that out. So they're probably just a year or two ahead of Sandfire. I think they're both probably quite good companies, Julia. It's just, you know, what's copper going to be in another 2 or 3 years? We might have 6 to 12 months where the price is strong, but the market will keep looking forward, and you know, you might see the next downturn, which will inevitably happen. It'll happen to all commodity stocks. So the stocks that you more trade, and I generally think, again, you buy things like this when they're out of favour, and you get wary on them when they're running.
Okay, so we're talking Sandfire then and copper stocks. We are taking a short break, but we'll be back to answer more of your questions in just a moment. And don't forget, if you'd like to speak with our expert panel, our phone lines are open, 1300 30 34 35, or you can email us, yourmoney@skynews.com.au.
You're watching Your Money, Your Call on Sky News Business.
130 years ago, 7 ordinary men gathered in Broken Hill and dared to think big. The company they created that day was BHP, the big Australian. Today, the same hard work and imagination so valued by our founders has seen us grow into Australia's global resources company. Imagine what we could all achieve if we continue to think big. Think big.
Turn up the heat during the ultimate BMW 2017 plate clearance with hot opportunities and finance offers available across the range.
It's clear-cut Rivers clearance. Now we take a further 30% off. Footwear from $5.59, clothing from $3.49, and accessories from $1.39. It's our ultimate clear-out. Limited time only at Rivers.
Are you ready to commit to quitting smoking today? Try Nicorette Quick Mist from Chemist Warehouse. It starts to relieve cravings from 30 seconds and makes you 2.5 times more likely to quit. Plus, it's easy to use and it discreetly slips straight into your pocket. Right now at Chemist Warehouse, Nicorette Quick Mist Triple Pack is $49.99. Do something amazing today with Nicorette. Live, look, feel well at Chemist Warehouse.
Want to save time? Well, try our new time-saving way to shop. Now, Woolworths will pick it and pack it, ready for pickup. It's called Woolworths Pickup, and it's free.
That's why I pick up from Woolies.
You want to get the most out of your business travel budget?
Well, Trivago compares over 200 different websites and apps to find you a better hotel without spending too much. And that's how Trivago gets you more for your travel budget. Hotel Trivago.
Only customers get our 24/7 phone and online claims service. Get more with Budget Direct, Money Magazine's Insurer of the Year.
Hello, secret camera. It's too crazy.
Yeah! I'm okay with crazy.
Uh-oh. Here we go. Gotcha. Whoa! You're darn right, whoa.
Australia said yes to same-sex marriage. What about coal-fired power, the refugee intake, euthanasia, major drug reform, cutting private school funding, Indigenous recognition, female gender quotas? Have your say. Politics HQ is back, only Sky News Live.
Back with your money, your call.
Welcome back to Your Money, Your Call. I'm Julia Lee from Bell Direct, and joining me on the panel tonight we have Ben Clark from TMS Capital and also John Athanasiou from Red Leaf Equities. And it's time to answer a few more viewer questions before the end of the show. We have Nancy on the line from Sydney. Nancy, great to hear from you. How can we help you out tonight?
Hi panel, enjoying the show. I'm looking at buying THC, I don't know if it's gone up too far, and AUZ at these levels. I haven't bought them yet.
Oh, talking about the hottest sectors of the market at the moment is THC in the, I guess, the weed stock space or medicinal cannabis, and AUZ, which is in the battery space. I think a nickel cobalt project where it's become a 100% owner. So the hot themes of 2018 so far. I know that Red Leaf's big on some of these cannabis stocks.
Yeah,
what do you think of THC?
Well, THC, we were actually the joint lead manager when they IPO'd early last year. Listen, the reason why we like THC, the hydroponics company, is they've got their licenses. They're about to get their third one fairly soon, so I think that's the next one. That's their manufacturing license, so I think that'll give another spike. But I will mention that it is a volatile BCL THC, so you could probably pick it up at a, you know, like it moves like 5–10% either way. So you could probably wait till a pullback, and the pullbacks just happens to be more sellers than buyers on that particular day. No particular reason, people taking profits. But overall, we're very bullish on THC in comparison to other cannabis stocks, because not only they're doing research in the medicinal cannabis space so they could eventually sell product, they're actually the guys that sell you the shovels to build the product. That's hence the name. So they sell you equipment to grow the product and greenhouses to grow the product. Okay. So that's why we think it's relatively safer. So almost like the first cannabis services company in a sense.
I mean, John, you seem to be the expert in this space.
A lot of developers.
So you mentioned licenses. What are the different licenses that cannabis companies
So there's numerous licenses. Number one is grower's license. So if you don't have one of them, you're not going far. That's kind of important.
Do they all have growers' license?
Not yet.
No, okay.
Yeah, some just say they're employing someone, and that works enough for them as well. So no, the most important license is obviously grower's license, and then the next cab off the rank is you want your manufacturer's license, and then there's an import license as well.
What do they need to import?
Well, the product will be from elsewhere, and then just like Bellamy's and other milk product, you get it from elsewhere, and then you finally manufacture it here. Okay. Yeah.
Oh, so you don't grow it here?
Why don't they grow it here?
Well, it might be more developed over in Canada, for example.
Right.
Yeah.
Cheaper
a lot of them are making it here, but a lot of them want to have that license, so they could get it here, manufacture it here, and flog it off elsewhere.
Okay.
But also the other big thing is we're allowed to export the stuff. That's how we've had the rally. And there's going to be further legislation, like Canada is about to legalise it. So, you know, if medicinal cannabis is huge, which we believe it is, the recreational cannabis will be take it to another level. So we just think it's a matter of time before Big Pharma takes one of these guys out. They're just sitting on the sidelines.
So your two favourite ones?
THC and I'd say Crespo Pharma, CPH.
And why Crespo?
Crespo, they've got all the licence. It's run very well, good board, and they're also got a number of agreements overseas where I think they'll be able to sell product fairly soon.
Okay. Any thoughts on the weed stocks, as we call them?
Not really, Julia. Yeah.
What about the battery space? AUZ's the other company, and you know, 2017 was the year for cobalt, lithium. Can it continue?
Well, look, we don't short stocks, but if I could short, I'd be shorting lithium stocks at the moment. So I reckon it's a massive bubble. I know what the logic behind it is. I know that there's going to be more lithium needed in future years, but I actually read in the Fin Review an excellent article, I thought, from this Gun US independent think tank that was saying the supply of lithium in the next 3 to 5 years is absolutely going to dwarf the demand that's out there, and it's going to take maybe a decade or two for the demand to catch up to what's coming to the market. And in fact, this group was saying that some producers are actually struggling to sell product at the moment. So I'd be really careful with it. It could go a bit further, but you know, when I look at the valuations and I look at the analysts' numbers in terms of, I just think they're hopelessly optimistic. You know, they're all betting on future price rises and all of these things to come into production on time, and it's not a spot market like iron ore where you can just sell into a market. You actually have to have long-term contracts with companies generally. That market might evolve, but what I think is coming is a huge supply response, which is going to overwhelm the buyers.
Okay, so cautious now or second half of the year, because timing is usually key when it comes to things like this.
For me, I'm just avoiding it. Okay. But look, it could go a bit further, but I think there's going to be a stage where we're going to, as these big projects do go into production, where you're going to start to see pressure on pricing. I think it's inevitable.
Would you apply the same principle to the actual ones that actually are in production?
Well, yeah.
The same
principle. Yeah, I probably would. Not because they can't still be profitable. It's just that I think the market is pricing in a hopelessly optimistic outlook for them.
Do you agree, John, or do you disagree?
Listen, I think there's a lot of truth in that. I'm biased towards the ones that are actually in production. In regards to supply, the one thing that we have to take into account, there actually is a lot of lithium underground. It's just the extraction process is very, very difficult. There's a lot of chemicals and so forth involved, which might make the supply part very difficult. I think the bigger risk to lithium is technology always evolves. Yeah. So there could be something else better to produce these electric cars going forward. So I think that's the bigger risk than supply at this stage. Overall, in the short term, I think the story will probably continue to run over the next 6 months, but I'll be sticking to being a little bit more cautious. I'll be sticking to the producers. I
mean, talking about one of the producers, Orocobre came out with an update today. It's in a trading hold at the moment. They came out with their quarterly numbers. You know, record revenue, $40 million US. That's up 72%. The average price received $11,550 a tonne. The cost of sales down 21% to just under $4,000 a tonne, which is an incredible margin. Yep. The cash margins are up 23% to $7,604 a tonne. And then you have a new company that's taking a stake in Orocobre at a 17% premium to the weighted price over 20 days, I think.
It's Toyota, isn't it?
Yeah, Toyota.
We were already on the register. We used to own Orocobre. Sold over way too early. But that's the one for me if I was to buy one, because they were talking about lithium 10 years ago, and everyone's now talking about it in the last year. But they were a long way ahead of the curve. They spent years getting this project up and running and getting their costs really down. And that's, I think, the other thing is the newer entrants will find they'll go through a similar experience to Orocobre, which it took 2 to 3 to 4 years to get these plants really humming. Lynas is, the same. You know, it's finally getting that plant to be profitable. So it takes time.
A lot of time. And talking about time, that's all we have time for today. Thanks so much to our guests for a fantastic show. Ben Clark from TMS Capital and also John Athanasiou from Red Leaf Equities. And to you, our viewers, thank you for your calls and your emails tonight. Remember, if you have missed any of the program, want to listen again or catch up, go to your favourite podcast platform and search for Sky News, Your Money, Your Call. Until next week, I'm Julia Lee from Bell Direct. Thanks for your company.
Information presented on this program is general in nature. Viewers should seek their own professional advice before purchasing products or services. The producers of this program may receive a fee for commercial arrangements with companies featured in this programming.